Want to know the real estate investing secrets that will make you rich in 2025? In this video, we're spilling the beans on the most effective strategies, tactics, and techniques to dominate the real estate market. From negotiating with sellers to finding hidden gems, we're covering it all. Whether you're a seasoned investor or just starting out, you won't want to miss these expert tips and insights that will take your real estate game to the next level. Did you know that the global real estate market is expected to grow by a staggering $3.5 trillion in 2025? This explosive growth presents a wealth of opportunities for savvy investors looking to capitalize on emerging trends and shifting market dynamics. Whether you're a seasoned investor or just starting out, there are proven strategies that can help you navigate this thriving market. Let's explore some of the most promising real estate investment strategies for 2025 that could set you up for success in the coming years. In 2025, successful real estate investors are embracing a variety of strategies to navigate the evolving market. Here are some key strategies and insider tips that are making waves. Investors are focusing on areas with strong economic fundamentals, such as cities experiencing population growth, infrastructure development, and job creation. These markets are expected to see property values rise over time, driven by increased demand. Successful investors are using data-driven insights to pinpoint emerging cities and neighborhoods before they become widely known. It's about spotting trends early, whether it's in tech hubs, manufacturing centers, or transit-oriented areas. Look for markets where infrastructure improvements, such as new transit lines or tech parks, are underway. These areas often experience a surge in property demand and can offer significant appreciation potential. The shift towards remote and hybrid work has changed the demand for both residential and commercial properties. Successful investors are capitalizing on this by targeting properties that appeal to remote workers, such as homes with dedicated office spaces or those located in less dense, desirable suburban areas. On the commercial side, flexible office spaces and co-working hubs are in high demand, offering short-term leases that cater to businesses adjusting to new work models. Invest in properties that can easily adapt to multiple uses, homes that can accommodate home offices or mixed-use commercial buildings. Flexibility is key as the future of work continues to evolve. Short-term rentals, especially on platforms like Airbnb, continue to be a lucrative strategy. Investors are purchasing properties in high tourism or high-demand business destinations and converting them into short-term rental properties. The flexibility to rent out these properties when not in use, combined with the rising travel industry, can offer higher returns than traditional long-term rentals. Research local regulations regarding short-term rentals. Some cities have introduced new laws that limit the number of days a property can be rented or require specific permits. Being aware of these can help avoid legal pitfalls and maximize your investment returns. With high entry costs often associated with large-scale commercial properties, many investors are turning to real estate crowdfunding and syndications. By pooling funds with other investors, you can gain access to commercial real estate opportunities that would otherwise be out of reach. This approach allows for diversification and access to larger, more lucrative deals in office buildings, retail centers, and multi-family properties. Choose crowdfunding platforms with a proven track record and transparency in their dealings. Vet the project sponsors thoroughly, and understand the fee structure before committing to ensure the investment aligns with your goals. Successful investors are increasingly using technology to gain an edge. From advanced property valuation tools to AI-driven market analytics, technology helps investors make smarter, data-backed decisions. By using predictive analytics, investors can identify undervalued properties or those that are poised for significant appreciation. Use tools like automated property valuation models, local market trend trackers, and AI-powered investment platforms to quickly assess the potential of a property. These technologies can help reduce guesswork and optimize investment returns. As sustainability becomes a bigger focus in real estate, many investors are considering energy-efficient and green buildings. There is a growing demand for environmentally friendly properties due to both regulatory requirements and the increasing preference among tenants and buyers for eco-conscious homes and offices. Investors are adding value by upgrading properties to meet green standards, which not only improves marketability but can also lead to higher rents and sale prices. Consider investing in properties that can be easily retrofitted with energy-efficient upgrades, such as solar panels, efficient HVAC systems, or LEED certification. These properties are in high demand and often command premium rents. The fix and flip strategy continues to be popular in 2025, but successful investors are more selective about where they invest. By focusing on undervalued properties in high-demand neighborhoods, investors can renovate and sell at a profit. With the right renovations, focusing on cosmetic updates rather than major structural changes, flippers can maximize their return on investment. Look for properties that require mostly cosmetic fixes, kitchens, bathrooms, and curb appeal improvements, rather than extensive renovations that eat into your budget. In high-demand areas, even minor upgrades can significantly increase a property's value. By adopting these strategies and keeping a close eye on market trends, successful investors in 2025 are positioning themselves for long-term success in a rapidly changing real estate landscape. In 2025, several proven investment strategies in real estate can offer opportunities for substantial returns. One popular approach is the buy and hold strategy. This involves purchasing properties in high-growth areas and holding them for long-term appreciation. Investors can also benefit from rental income as a passive cash flow stream. By carefully selecting locations with rising demand, you can ensure the value of the property increases over time while generating income from tenants. Another strategy to consider is Airbnb rentals. With travel and tourism continuously growing, investing in properties for short-term rentals can be a profitable option. Focus on high-demand tourist or business locations where you can generate higher rental income than traditional long-term leases. In particular, vacation destinations and bustling cities offer opportunities for strong returns through platforms like Airbnb. For those looking to invest without directly owning property, real estate investment trusts, REITs, provide an appealing alternative. REITs are publicly traded companies that own, operate, or finance real estate. They offer the advantage of providing exposure to real estate while remaining liquid and diversifying your portfolio. By investing in a variety of commercial or residential properties through REITs, you can benefit from the real estate market without the need to manage properties yourself. The fix and flip strategy is also a time-tested method for real estate investment. This involves purchasing distressed or undervalued properties, renovating them, and selling for a profit. This strategy requires more time and effort but can yield quick returns. Focusing on emerging neighborhoods where properties can be bought at a lower price and renovated to appeal to buyers or renters can increase profitability. For those willing to venture into more significant investments, commercial real estate can be highly rewarding. Properties like office spaces, retail centers, or industrial buildings are attractive investments in markets that are growing or evolving. Businesses are adapting to new work models, creating an increased demand for commercial spaces. With the right market research, commercial real estate can provide higher yields than residential properties. Real estate crowdfunding has gained popularity as an innovative way to invest in large-scale commercial properties without requiring significant capital. Through online platforms, investors can pool their resources with others to access larger investments, like office buildings or development projects. This method offers diversification, access to high-value properties, and less capital risk for individual investors. Focusing on emerging markets can provide substantial returns. By identifying cities or regions experiencing rapid growth, especially those benefiting from infrastructure improvements, you can buy properties at lower costs before prices rise. Areas with increasing demand due to job growth, population influx, or new public services tend to see significant property value appreciation. Each of these strategies provides different avenues for entering the real estate market in 2025, catering to various investment goals, risk tolerances, and time commitments. If you've had any experiences with real estate investing in 2025, or if you have any questions about the strategies I just shared, I'd love to hear from you. Drop your thoughts or questions in the comments below. I'm here to help. And don't forget to check out my other videos for more in-depth insights on smart investment strategies, market trends, and tips to make the most of your real estate ventures. Keep learning, stay informed, and let's grow together.